Hi everyone and welcome back to another live trading series. Due to popular demand, everyone has been asking how do I set up strangles, how do I choose my strikes, how do I choose my expirations. This is the second time I'm filming this. I was just filming it and the battery died, so I kind of lost everything. Rookie mistake. Even after 100 videos, I'm still making these rookie mistakes. So I'm going to be going over what I do personally with strangles, but I'll tell you, this is an intermediate option strategy. I'm not going to be going through what is a call, what is a put. I assume you're watching this, you already know the very basics, and now you kind of want to know how I do this intermediate strategy. I learned everything from the Tastytrade people, the Tastytrade YouTube channel and their website. I learned strangles. I started implementing strangles like 6 months ago based on their recommendation. And then I tweaked it a little bit. Every company is a little different. You have to adjust your strategy. I only trade with companies I'm comfortable with and I've traded in the past, but I'll go through right now. If you look on the screen, I sold a January 15th strangle on Nvidia. I chose the 610 call and the 470 put. If you see over here, I'm going to be rolling these out for you guys in a little bit. I am up 75% on one, 50% on the other. This has only been for 2 weeks and I have 11 days to expiration. I'm going to roll it out another 2 weeks. I don't feel comfortable going 45 or 60 days on Nvidia, but that's just personal preference. So I'm up $666 here, $485 here. And I'll show you how I chose those strikes. So I used technical analysis for this one. So let me backtrack a little bit. There are two ways to do strangles: technical analysis and choosing the Greeks. With Nvidia, I went pure technical analysis. If you take a look here, Nvidia has been trading within this range since September. Let me just reset this chart. If you take a look back to February 2020, it's kind of been going up and down, and then it's been shooting up 6 months, 7 months straight, and then it found this trading range. Everyone's technical analysis is a little different, but I think everyone can agree it found a top and it found a bottom within the couple months, and it's trading there. It's been trading in that range for a couple months now. So the 590, it was the highest it touched in September, and it went down to a low of 470. Then you can even see in November, it kind of tested this and came back down. Like, it came back down hard. This is a daily chart. This is a daily candle. So it went down $50 within this one day. This isn't a be-all, end-all. It doesn't mean this is a short-term analysis. It doesn't mean Nvidia will never go past this. That's not what it means. This is kind of what the algorithms would use and what day traders would use, and this is kind of what I use as well. If you notice, I sold right at the 470 put. I am comfortable getting assigned at this price, so I do have the $47,000 on hand. If Nvidia tanks, let's say January 15th, and I don't have time to roll it and I don't manage it and I accept assignment, I do have the money. It is a cash secured put for me. I can get assigned at this price. So if you notice, let me move this up a little bit. I put this line at 590, that's a support, but I sold at 610. I'm more worried about the upside. I don't have, obviously, I sold a naked call. I don't have the shares to sell someone at $610. So I'd be short 100 shares or 200 shares of Nvidia, and that's riskier for me. So that's why I gave myself a little bit of a buffer. I didn't want to sell right at 590. That I use that as support. If it gets near 590, if it gets near 600, that's when I'd manage, and I'd kind of move the strangle up or down. So there's obviously two ways you could manage a strangle. I feel like there's 5. You can let it ride out to expiration, worthless. You can ride out to expiration and get called or assigned. You can roll it up or down with no change to the expiration, and you can roll it up or down with a change to an expiration. So I have these January 15 calls, and I can move this to 650 and 550 if I want. If I can move it up, or I can move it down. What I like about strangles is where you're losing money on one, the other one makes money. Obviously it goes up, your put makes money and your call loses money, but conveniently here, it's been trading within the range I selected, so both of my strangles are, both legs of my strangle are making money. I'll show you how to roll it now. I'm going to be rolling it out 2 weeks. So I hope, if you don't have Quest Trade, this might not be as relevant for you, but I'm going to create order. I'm going to buy back, you have to buy to close the original one. So if I send order right now, this says buy to close, but I'm going to add a call and add a put, and I have 2 of each, and then select my date. I'm going to go out only 2 weeks. So for my call, I'm choosing the same top, like I'm choosing the same call I'm doing. Like I'm not changing anything. I'm still going 610. Let me move this up so you can see. I am giving myself a little bit of a buffer. So right now, Nvidia's at $530. It would need to increase by $80 within 3 weeks for me to get tested, which can happen. And then I would also need it to go down $60, $50, which is a little riskier. You know what? I'll move it down a little bit. So I'm keeping my call side the same, but for the put, let me give myself a little bit of a buffer, and I'll sell the 460 put. I had the 470 before, and now I'm going 460. And now take a look. Look at this range. I think I can make $400 by rolling this. So I am buying to close the original one, and now I'm selling to open a new one using the same call, but then a kind of lower put, just to give myself a little bit of a buffer. So, and I am making $800 just by rolling this out. Let's send order. I hope this gets filled. Let's go. What else have I been doing? The other way, the Tastytrade folks, this is what they recommended. They didn't really do technical analysis. They went based on Greeks, and the Greeks is what I've been doing on AMD and Twitter. So take a look here. I sold the 115 call and the 77.5 put on AMD. And if we go, why technical analysis doesn't work so much here, if we look at the chart for AMD, it's never hit 120, 115 or 125. So you can't really choose a top. I did kind of choose a bottom here. What I initially did, I sold a 72.5 put. I chose this line as support, but then I was already up 50%. So then I rolled it up to 77.5, which is kind of here. I use this little bar, this little red candle as support. So for AMD, what the Tastytrade folks recommend is 30 to 45 days to expiration using the delta. So if we go here, this is 45 days. Hopefully you can add this little delta gamma. You can add the Greeks to your trading style. And this tells you the deltas for every strike. Oh, this is Twitter, sorry. AMD, let's go February, and then let me see everything. What they recommend is 10 or 15 delta 45 days out, and then close it or roll it every 30 days. So once you're 15 days to expiration, that's when you should make a decision. There's too much gamma when there's 15 days left, so they recommend to roll it. Let me show you. So see here the delta on the call side, the delta on the put side. They recommend 10 or 15. So 10 for the February 19th, which is like 45 days away. I hope that's 45 days away. February 19th is 77.5. And then if we go to the call side, 10 is 110. So to me, this is why you have to, these aren't hard, fast rules. I use the Tastytrade way of 10 delta as a base, and then I adjust it based on the stock and based on my risk profile. I think within 45 days, AMD can hit the 110 strike. So I'm not going to go with this 10 delta. That's why I went with the 115 delta. I mean, the 115 strike, which is the 6 delta. Yeah, so AMD hasn't been moving too much. Okay, I guess over here in July and August, they kind of hit their little growth spurt. But the past couple weeks, the past couple months, I've been monitoring and I've been managing these strangles. If you watch some of my other videos, you'll see what I do with AMD. I go a little, this might be risky for some, but I have 10 strangles. I had them at 125 and 72.5, but even though I made the strangle tighter, I'm still making money on both. I want to see executions. I want to see if I could show you what I've done in the past 1 month. So here was my initial one, sell to open. So I sold it. I did a 60-day to expiration, so I sold it December 16th. And then so check it out. I sold 10 at 208, and then I bought it back within 6 days, 7 days. I bought it back at over 50%, and then I made the strangle a little tighter. So I bought back the 125, and I sold the 115. Also, check out what I did. This was my initial one, the same day. I sold it at 70. I sold 72.5. Where is it? So, okay, I guess I didn't. Okay, I guess I didn't manage this properly, but yeah, I was able to close out. You can see my initial strangle that I had. This is the one I closed out, 72.5 and 105. So even though AMD was increasing, I was still able to buy to close at a gain and roll it out. That's kind of what I like about strangles. When one side is getting tested, you kind of move both up and down together. So with AMD, I still have 46 days left to expiration, so I do have to let these ride out. Once these get to 50% profit, I probably will close them and roll them. I'll show you what I did with Twitter. I kind of did the same thing. So I chose 44 and 65. If we look at Twitter, obviously, it's not, I didn't want to go back to October 2014, which is when they were, February 2014, which is when they were in the 60s. I don't think that technical analysis lasts that long, sorry. So Twitter has had some weird days. I did choose 44 as my bottom and then 65 as the top, but I went mainly with the Greeks here. If you want to do Twitter as well, let's take a look. Let's do the Tastytrade way, which is 45 days to expiration, and the 10 delta. So 10 delta would be 42, 43. Let's go 43. So you'd be earning $90, $89, $90 here. Your strangle would be 43 and okay. Yeah, I wouldn't know what to do here. 43 and 70. Because there's a $5 strike difference in the strike, you don't really have the 10 delta. I would choose the closest one. I don't know, depending on how comfortable you are. I wouldn't sell a strangle only to make 55 cents a share. I would, you'd want a little bit more. I don't think the Tastytrade folks would like what I'm doing because there's not enough volatility. I think they would go riskier with a riskier stock that moves more, but I'm just not comfortable with that. I have been selling strangles on Tesla, but I don't recommend it to anyone. Tesla just keeps going up. You want something that's trading in a range, like you saw Nvidia. Where is it? You saw Nvidia like trading within this range, but Tesla just keeps going up. Like, look at it. Look at this chart. Look at the daily chart. You could have had a range here. This is 4 weeks, but it just keeps going up. If you were selling strangles in the summer, I think you'd be fine. But Tesla, the movement, it goes up way too much per day. I don't recommend it. I like AMD. It kind of, look at this. It's kind of trading within a range. It doesn't shoot up that much. It kind of went crazy in July, but I just wouldn't recommend it. A lot of people have been asking exactly what trade to do. Please do this at your own risk. It is a little scary for me to recommend this to someone, but if you do want, I'll just recommend one right now. So I would choose to sell a February 19th expiration. The call side, I would go 120. The put side, I would go, let's say 75. You'll be earning $225 if you sell this strangle. Obviously, make sure you have the cash. Manage it if it gets tested, and let me know how it goes. I obviously do this at your own risk. I don't want to get sued. I would feel terrible. This is why I don't sell signals, or I don't sell like some Discord or a Patreon where I tell you exactly what to do. I like to take risks. I don't feel comfortable telling someone else to. This is how I choose my strangles. I either do based on delta or technical analysis. Some stocks you can't do technical analysis on. There is no, AMD's at its all-time high. You can't choose a top. You can use the charts to help you choose a bottom, So for the bottom for the past couple months for AMD is 73, 73, 77, but there is no 73 strike here, so I would go 72.5. I hope this helps. It is risky. It does get kind of confusing at times, but selling a strangle, the concept is easy. You're selling something far out of the money, up or down. A 10-15% movement wouldn't put you in trouble. So like if you sold this strangle right now, AMD would have to increase by 30% within 45 days for you to lose money. But for you to even get tested, we need to increase by 30%. Can it happen? Yes. But obviously manage it when it gets there. That's all I can say. I hope this helps. I do recommend going and watching the Tastytrade folks. They're a lot better. They're a lot better at explaining than I am. They've been doing it for years. They are the experts. They do get confusing at times when they say, like standard deviation, and they have all these jargon terms that beginners won't understand. But I do watch their videos and I implement strategies based on what they say. I don't make up my own strategies. I take what they say and I adjust it a little. So a little bit of a long video. I hope this helps. If you do plan on implementing or putting a strangle on, let me know which stock and let me know how it goes for you. Thanks, guys.